The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we got a little bit of selling coming into the market this morning, it looks like. It started mid-afternoon in New York when the news from Macau came out that their GDP had dropped 25%. No one had ever even heard of a figure that big, let alone seeing one. And then we also had manufacturing from China come out also. And that put the damper on the Nikkei, the Japanese market, and also the Shanghai market. But Shanghai was down 5%, but only closed down 1%. But frankly, you know, that market is a little bit suspect as far as who's pushing the buttons, much like ours, what ours is. So the key today is what's going to happen. Folks, technically, we were looking at this market to bounce from the 24th to the 28th, which we did on the full moon. It stopped right where it should have at the 618 on most of the indices, 382 on some of the others. But the key here is that the way we've come off it, has told us that we literally want to go down more. Now, I'm going to post a chart here from the Elliott Wave Theorist, and I just want you to, we did this yesterday just to show you where it is, and just give you some ideas of where I think we could be going here, because we live in an interesting time, to say the least. But as you can see, you know, this goes back from 1997. We made the high in 2000. We backed off into 2003. Then we rallied up into 2007, and we came down on March 9th of 09, and then we went up into May the 19th of this year, and now we're coming down. And the thing is, we've come down harder on this one than we have the other two tops. We've broken faster, and this is just the beginning of what we're looking at. I'm going to present here what I think is an idea of where we might be looking, where some of these things might go in the near term. So if you'll bear with me here 1 second, I wanted to pull up my second chart if I can find it. And where is it? Oh dear. Okay, here we go. Oh, there we go. Just a second. I'll get it ready, and then we'll be in business. We'll just go right here. Okay, now we can do this. Well, if we look at, I'm just looking at this technically, boys and girls, because that's really all that really happens in these markets is the ups and downs. But what I've done is I've drawn a blue line from the high in 2000 to the high in 2007 in October, where we took a slightly higher high out from March of that year. Then we had the big break. Now, what I think the market is going to do is I think it's going to come down here to 1576 in the S&P, and I believe it's going to happen very, very quickly. The reasoning for that is the way that the market came off from August 19th. Let's try that again, Larry. August 17th down into the 24th. That was 10 days down. Let me see. Yeah, 10 days. It's one week down. Then we rallied 1 week from the 24th, 25th, 26th, 27th, 28th into the full moon. And now we've come off sharply the first 2 days, which tells us that something different has happened. I don't know if it has to do with Macau or China or Timbuktu. I understand that Putin is putting troops into Syria right now. So whether that has anything to do with it or not, I'm not sure. But let's get back to where I think we're going in this leg down. And this is just the first leg down, folks. I believe our original leg is going to take us down below 666 in the S&P. I know you think that I'm crazy, and I probably am, but that's what I think is going to happen. So stop and think what happened from August the 17th. We were trading around near 2100 in the S&P, and then 7 days later on the 24th, on that Monday, we were trading at 1831. We dropped 300 handles in the S&P. and then we rallied 170 handles up into almost 2,000. We got to 1997, I believe. Now, if we figure out that we broke 300 points in 1 week, 300 handles, and if we did hit a high like we think we did in the thing on Monday or on Friday, then you take your number of 1990, subtract your 300 points, and that takes you down to you're really close to the 60. That would take you to 1670, and a 1.27 expansion of that will take you down to 1576, 1575. So I don't know when that's going to occur, or even if it's going to occur, but technically that's what we could happen. That would also be a 20-minute line if it hits at that point and stops. So that's one of the things that we're looking at here for potential as a price objective of this. Just looking at the ABCD move, measures to 1600, and so somewhere between 1770 and 1570, we're probably going to have a bounce. And boy, when the bounce comes, folks, it's going to be one monster bounce. That's the main thing that is going. Now, people are talking about quantitative easing this morning, about another round of that. I want to take you to a trip down memory lane, folks. I enjoy doing this because I have so many memories of my years doing this. But this chart was furnished to me by my good friend and student Todd Gordon, and this goes back over 30 years, going back to 1979. And if you'll look at that bottom on the left-hand side of the market down there, you'll see in 1981 on August the 9th. That's when we had a multiple conjunction of many planets, and that's when the market bottomed for bonds. It also bottomed. Well, the bonds bottomed a little bit later. They bottomed in October of '82, but the stock market bottomed on August the 9th of 1982. The S&P had begun trading on April the 16th of 1982. There was nobody in the pit. And believe me, there were even less people in the pit in August of 1981. But the S&P at that time was trading at 103, and the futures were trading at a 3-point discount to the cash because nobody even wanted to own the futures. So that was about the last time that happened. And as you can see, bonds and stocks started up together, showing you that you have a really large correlation. There was only one time during this whole 30-year period, and that was during 2000, when you see where the first circle is. That's when we had the first aberration between stocks and the bond market. The bond market kept going up and stocks came down, and that was the first instance of the flight to quality. Now, if you'll notice the second circle that's marked with the red arrow, the one on the right, we had the second group of that flight to quality again, and that shows you that the stocks went up and bonds went down, and that was during the high of 2008. Now, what this is really telling you, there's a high correlation between stocks and bonds, so stocks and bonds can go down together. And we've been going up for 30 years, basically uninterrupted. We've had some, corrections, of course. 1987, anybody thinks that wasn't a correction is nuts. But if you look at it on this chart, it doesn't look like anything. But boy, when it was happening, it was crazy. So we'll wait and see what's going to happen with this. But bonds and stocks can go up and down together. So we want to just try to trade each of them separately. I've been bearish bonds for a long time here, and it looks like we still want to, go much higher. In other words, much lower in bonds. Higher interest rates are pretty much on the way, as near as I can tell. By looking at this, it's just got a very, very bad feel to it, and the charts are telling you that that's pretty much the same thing. Now, if we take a look at TLT, which is the 20-year bond, it has a really interesting pattern here because we've talked about this 20-min line that we've seen so many times, and that's what happened last week in the TLT when we made the 61% retracement and the 786 retracement in that market. It stopped exactly on the 20-min line. It was so perfect from the January low to the September low, and then coming in on the high that we made just last week on the 24th. So that tells us that and then we gap down, which is also telling you that you probably want to be prepared for, much lower prices. Now we will, it looks like we're going to open a little lower, well, maybe more than a little lower in some of these markets this morning. But remember, there's going to be people that want to buy it, and that they probably will be right. But remember that when all of your frustrations in this business, either your life or trading or whatever, relationships, come from expectations that have not been fulfilled. So try to react on what you see and not what you think, and that is really difficult to do, folks. It's almost borders on the impossible, and that's why some people have a difficulty in trading, is because they expect certain things to happen, and when they don't, that makes it a very, very difficult situation to try to either put a trade on or even to handle money. So all of that is moving around quite a bit. So we'll see what's going on with some of these things. We've had a little bit of a bounce here this morning before the pre-opening. Now this morning's opening is going to be crazy. There's no question about it, because when the orders come in, I imagine because the market is down so much pre-market, there's going to be more selling coming in, and this will be new selling, because this is not the people that were trading overnight. Only the middle-aged crazies are trading overnight. The people that stay up to all hours of the morning, doing this kind of stuff. But anyway, that's neither here nor there. But we are seeing incredible volatility like we've not seen before. Tom O'Brien mentioned when he was on John Logan's show that the Nikkei and the Hang Seng both closed right near their lows of the 24th. Well, if we were to do that, we would be looking at around 1830 in the S&P. That would be down another 80 handles from where we are right now, and we're already we're believe it or not, folks, we're 70 handles. We're 80 handles down from where we were Friday at 3 o'clock. I mean, can you imagine that? This is the second day of the week. This is not a good sign, folks, because when markets drop this fast, that usually means that they want to go lower. So keep that in mind. One of the trading tactics that I was taught by the gentleman who worked with Amos Hofstadter for many years, Jay Crossman. I was able to meet Amos a couple times. But one of the things that Amos did is when he had a really good position on and was making a lot of money, what he would do is he would put on a position of one lot in something just to watch it. We'll be right back after these few words. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I wanted to focus on the 20-minute line again because we're seeing so many of them given the fact that we're having such great volatility. And you can see here on Starbucks, this is going back over the last couple of months, that we had a 20-minute line that formed way back in April. And you'll notice that it hit, there's 4 markings on there, and you'll notice that it hit that trend line 4 times. Then we had the island reversal in Starbucks, and then the market broke down quite a bit into the 24th, and then it rallied, as you can see, back in to touch the 20-minute line one more time. And what's interesting is that it also makes the 135 pattern, which is the pattern that was popularized by Roy Longstreet and his son Bill. And each one is a 618 or a 786 retracement of the previous high. So you have 2 lower highs. You're trading in the direction of a downtrend. You have a 20-minute line there. You have 2 ratios coming in, the 618 and the 786. So that sets up a very high probability that the price of Starbucks should be heading lower. The risk on this is a couple dollars, and your first profit objective, could be around 10 cents or 10 points. So we'll look, but we're starting to see volatility everywhere, folks. and it's just starting. It's going to be really, really wild, I believe, all through September and October. We'll have days where there's not much going on because the traders will, in fact, be, totally worn out, which most of you that are doing this in the night where you get some of these fantastic swings, you'll realize that you've got to rest during the day because, it's a very, very strenuous time frame. But the only quiet time frame is usually in the afternoons when Asia is closed, but that wasn't happening last night. And what was interesting is when we started breaking here in the United States is that the market would, go down 50 to 100 points in the Dow, and then there would be no bounce. We only had 3 10-point bounces in the S&P all night long. And, if we get a 10-point bounce near, that'll take us up to around 1925 or 1926. But my feeling is, we had a 1,100-point down move on the 24th, so people are accustomed to seeing that. So it wouldn't be out of the realm to do 61% of that, which would take us around 700 points down. So we're down 400 now. To go another 300 points in the way these markets are jumping, and it's not a big deal. So if you're interested in buying, try to go for the time that says you should come down till about the around 300, another 300 points. So you'll be down 700 in the Dow. Look for support around there. That's if you want to be a buyer, that's the thing. And if you're a seller, just hang in there, and maybe it'll get there, maybe it won't. But I believe this is just the beginning, folks. This market has done a perfect technical picture of what it should do, heading towards 1600 in the S&P. That's what it's done. It's as clear as a bell. We broke 300 points from August the 17th into the 24th, 1 week. We rallied up 1 week. From the 24th to the 28th, that 5-day rally stopped at the 618 exactly on most of the things. 382 on the banking index and 618 on the IB. I went through all this yesterday, and now we've come down in 2 days. We've given more than 50% of that whole move up. We've given it, they've given it back. So another 300 points, you're going to give up 61% of it back. So these are things that this is just a normal technical part of the market that we're looking at. So, we'll see what's going to happen. And maybe this is a big bottom. I don't know. All I know is that it's certainly starting out poorly today, and we'll have to, wait and see how it all ends, because the talking heads can come on and talk more about quantitative easing if they like, and we'll see what happens with that. We'll be having a break here, and of course then the market will be coming on, and we'll have the start of the first of the wild swings, and then we'll see what happens. But frankly, I would sit on your hands if you want to be a buyer for a bit. Anytime the market opens down this far, you have to be very, very careful, because just some more incremental selling from anywhere, that could be it. And maybe the bottom was already in. I'm not, I don't know if that's the fact. We made a 50% retracement of that move from last Monday to Friday, but we did it in less than a day and a half. So that usually says that there's a lot of selling coming into the market. I don't know if it's related to China or Macau or whatever. All I know is that it's certainly got a higher probability of having some real wild volatility than is supposed to be in quiet. You remember just a few weeks ago, going back into early August, we were having 5 and 8 point swings in the market. We're not having that anymore. Okay, we're going to open now, boys and girls, 877-927-6648. Let the games begin. The flag is up, and down the stretch they come.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have the Dow Jones just rallied 150 points off of its overnight low. We went from 16,050 up to 16,200. Then we broke 100 points, and now we're rallying back again. So we're having incredibly wild swings. Remember, folks, this last Monday and Monday through Friday, we had almost 10,000 points in the Dow in swings of 400 points or more. I mean, that's incredible volatility, and big money does not like that kind of volatility. They like quiet, is what they like. Now, I wanted to cover a couple of markets that I think really deserve our attention, and the first one we're going to look at is the gold market, because we've had a nice move here over the past few weeks, And after we made that high up around the 1171, we came down to we dropped $70 down to 1116, and now we're trying to make a 61% retracement of this move up around 1149. We got to 1147 early this morning when the Dow was down more than 400 points, but that has since slowed down. The overall, I'm still really bullish on gold, but I'd like to buy it down around the 1070 level, quite a ways from where we are right now. But that's what I'm watching here in the gold. It's got a chance. Silver's holding up pretty good, but really we'll wait and see. Oh, we've got someone from Asia calling in. George, how are you this morning?
Hi, Larry. Nice to speak to you. How are you doing?
Nice to speak to you. It's great. I'm enjoying these swings quite a bit, so it's quite interesting. What can I help you with, my friend?
Yes. Can you update the graph of FXI and Hang Seng Index, please?
The Hang Seng, I don't really do that one, but I can do the FXI.
Oh, yeah, sure.
Yeah,
do you think it will drop below the last low at 32.8?
I think it will. See, what we've done so far is we have made a 786 retracement of that whole move, George, from 2011 down to where we are right now. And so it's got to hold it. But the problem is it's coming down so fast. That usually means that it's going to come down a lot more. That's what my guess is. So I do believe that we're probably going to get a bounce somewhere in this area, but how much it's going to be and everything, I'm still not quite sure yet.
You think there will be a bounce first before it will drop, right?
Yes, I do believe we're going to get a little bounce. There's just too many people that are bearish right now. The problem is we've got some really bearish news coming out of China and Macau. That might put a lid on the market rallying for a day or two. But, as you know, living in Hong Kong, that Chinese market can be manipulated very easily, by the Chinese government. And so you've got to be, really suspect. Hong Kong is freely traded, even though they take those crazy breaks during the day. I don't understand why. And but that market is more freely traded than we have in Shanghai and Shenzhen. So how is the overall feeling in Hong Kong? With the Hang Seng down and the Nikkei down and stuff. Do you have a feeling among your investors?
Most of people get trapped in last three months because in past 3 months everybody engaged in the stock market, and now they just look at the market and cannot do anything about it because they are all trapped there.
Oh, wow, that's not a good situation. Yeah. To be in for sure.
And many of colleagues said that once they heard about for example 1,000 point drop in Hang Seng Index, many of them will put the money in the stock and hope there will be a bounce on tomorrow.
Yeah, I've been through that before. So, I do believe we're probably going to get one, whether it happens in the next few days or not. But the overall bearishness of the U.S. stock market is pretty tough to unfold here. So, my guess is try to protect yourself the best you can.
Yeah, right. Can you update? Can you open your chart for FXI? So that we can take a look, please.
I put it into the. Let me put it into the room again. Just a second. I just did it, and I'll put it in again, and we'll be able to. I should be able to bring it up here without much trouble. Here, hold on 1 second, and we'll get it in here for you. No problem. And there, we just get it over here. Okay, here it comes. Now it's coming in there, and it's down some today, of course, on the gap down, but we are getting down to some support. That was the support that we had last Monday. If we take that out, boy, it looks pretty bad. That's there's no question about it. On a longer term, it doesn't look very good.
In technical basis, do you think it will bounce over the last high of about 37.4 around?
That's nothing. That's nothing more than a 382 retracement. We could easily do that. We could get all the way back to 41 or so, and it'd still be very, very bearish. So you could get a 20% rally here, and it would still be incredibly bearish. But we don't know when that's going to occur, and if it's going to occur. So just keep in mind that these markets move very, very quickly when they move.
Right. Larry, lastly, can you update on the oil market?
Very good. That was my next one. That was my next one to look at, was the oil market. So give me a second here, and we will. Where do I find it here? There we go. Just give me a second to pull it up, because we've had a really nice move here. 10% move in oil. It moved $10,000 in a matter of a week, which usually is indicative of short covering. But what I think I'm going to do now is I'm going to put it up over the last week so we can see the whole rally unfolding, because we have a real interesting pattern coming now. Is we're going to have our first major ABCD correction here in the oil market, if it comes in like I think it will, and that will come in at around the $46 a barrel level, about $1.50 from where we are right now. And I'm going to blow this up and put it into Tiger TV so the folks can see it, because that would be a beautiful ABCD pattern, which Gartley said by the first major ABCD pattern in a bull market, and that would be your first one from the bottom that we had down around $38 a barrel. We rallied up to 49. And so this would be our very first ABCD pattern occurring if we do get it down here around the actual price is $45.75, about $1.50 a barrel from where we are right now.
So it means we can buy on a retracement of
yes, I'm looking
right?
Yeah, buy that, and you have to risk, given the fact that it's as crazy it is, you've got to risk somewhere between 80 cents and $1 a barrel, because it's so volatile, because it is an international commodity that's traded extremely heavily, and so you do have the same volatility occurring in oil that you have with the stock market thing. So that's another thing that you want to keep in mind.
Should I look for the ABCD leg at 56.8?
Yes, that would
trade at 382, right?
That's exactly correct. The 56 would be the area where you'd want to be looking for. That would be the big retracement back if we get there. And believe me, oil jumps around a lot. It went from 62.5 to 38, and then 38 to 49 in a matter of a few weeks. So we're seeing huge swings. So you've got to protect yourself. But these are the targets that you want to be watching for. 56 will be an incredible task for crude oil to get above that.
Yeah. Larry, one more thing. If the U.S. market really crash, do you think the oil will drop below the last low of 37.8?
That's beyond my pay grade, George. I try not to think that far ahead. Trade what you see, not what you think, my friend.
Oh yeah. So okay.
Oil could rally with the stocks dropping, which it did. It did that last week. Stocks were down and oil was rallying. So you got to look at each market separately.
So yeah. So that means that 37.8 is major bottom, right?
I think so. Market, yes, right? I certainly do.
Yeah. Okay. That's helped a lot.
All right. Thank you for calling in, George. I appreciate it. If you see any of my friends in Hong Kong, tell them I said hello.
Yes, thank you.
Thank you, my friend.
Thank you, Larry.
You bet. Okay. All right, we're having a little bounce here this morning off the bottom. The Dow's rallied about 150 points off the bottom, which is a good sign. It tells you that the end of the world has been at least been delayed for a little bit. So we'll see, what's going to happen. The NASDAQ, of course, has moved 50 points off the bottom, and that's the one that is that everybody watches the most, more than anything else. Now, I wanted to switch gears and go over to the currency market, because that's where the real money is moving around. And we want to take a look here at the euro, because we're having some really nice swings here in the euro overnight, but it's very, very quiet over there compared to, looking at the rest of the markets. You can see here that we completed a big Gartley last night up here at this 113.20 level. That was the 61% retracement from the August high. And it also was an expansion of that previous move that we had from August the 30th down into the 31st when we had that big swing down. And so now it looks like we're heading down to around 1210 in the euro to see if it's going to get to that level. We'll have to wait and see. So we've got the Dow has now come back 150 points off its bottom. So this is a good sign. We're only down a couple hundred points on the day. The real key is are we going to get it all back? And that's what you have to wait. You've got to give it the first couple hours. And if the buying continues, you could end up unchanged on the day. That's just as wild as it could get, but it is certainly possible. The bonds have already sold off 2 handles from their earlier high. So we're living in really interesting times here, folks, with these swings that we're having. So just keep that in mind. Don't get too overly bullish, and certainly don't get too overly bearish. Now we've come off 200 points off the Dow, so we're up and running, and we've got the NASDAQ is moving really well. So it looks like all systems are go, and we'll be looking that we're going to be making a big move here in some of these things, and we'll see what happens, where the first resistance and support should come in. Let's just take a quick look here overnight. Last night, from the high we made on Friday to the low we made last night, the 382 comes in at 1943 on the S&P. If we blow through that and we're at 1939 right now, we could easily get up into to that area, and then maybe that's a major bottom here, and this takes us to the moon. I am not sure, because these markets jump around quite a bit, and we do have people in there with quantitative easing doing their thing. So just wait and see. But don't it's really the worst time to trade. If you're a technical, or not if you're a technical trader, of course, the best time to trade is in this opening hour. But if you're an investor, you want to wait to see, what happens, during these times when we have these, real wild swings occurring. If we look at that same number in the NASDAQ, which has been the leader of the pack, wow, it's rallied 70 points in just a matter of a little bit of time here. Hold on a second. We'll see what this what our rally back here on the NASDAQ is from the 382. We just hit it. We just hit it already. That was it at 42.19 in the NASDAQ. That was the 382 coming off. Now, if the market's really bearish, it's not going to get much higher here in the NASDAQ. But if we go popping through, we could get all the way up to 42.63, and you'd be able to see that also. But the overall scenario of what we're looking at here is where the close is going to be today. Because if we close badly today, you're going to be looking at a situation where you have a tremendous amount of selling still coming to the market. But by the way, if we close strong, then this low is a major retracement, is a 2-day retracement off the high, and you could easily go back and run up. The cycles say that you shouldn't do that, but the cycles can be wrong a lot, folks. So keep that in mind, when you're watching this also, because these are just probabilities. They're never certainties. That's the key to what we're watching when we're looking at some of this stuff. So that's the real key to to keep in mind that's what we're watching. So I hope that some of this is helpful to you. We're going to come up to a break here, and but at least the market has made some type of a bottom. The people that tried to buy on the opening are very happy right now, and the people that didn't buy on the opening are not happy. So maybe they'll buy on a little retracement, but it's still early and it's still wild, and you just have to give it a little bit of time to see if it's going to turn the market at all. That's what we've got to figure out. What's going to happen over these next few hours. That's the key to these things, because just early in the morning is still quite not much happening, and you just don't know what's going to happen overall. So we'll wait and see. Watch a mid-morning around 11:30 in the morning. That's the key time to watch, in my opinion. So we'll keep an eye on that. Boy, oh boy. Oh my.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we'll take a quick look here and review the markets. Here we're down about 300 points or so in the Dow, down 37 in the S&P, down 65 in the NASDAQ. The key to watch, folks, is the close today. If we close very badly, if we close below 1900 in the S&P and below 4150 in the NASDAQ, I believe we're looking at 1600 in the S&P as a target, and that's nothing more than the same move that we had from August the 17th to August the 24th. There would be another 300 points down, and with the markets as volatile they are, 300 points is not a lot anymore. Remember, last Monday we did 100 points in the S&P in a matter of an hour, and so this is the type of volatility. And I've said many times before, and I reiterated it yesterday, the problem is not in the stock market, folks. The problem is the bond market. And here we have stocks getting hit, very, very badly. And yet look at the bonds. They're also down today. So there's no flight to quality. And even gold, which is up $9, is still not a safe haven. So maybe these people are trying to figure out how to raise cash, and we'll see. But it's going to be the close today is the key, because if we close strong today, even up on the day with the Dow Jones, then you'll be looking at a much stronger rally, to the upside if that should happen. So the close is the key, and if it closes badly, I do believe that we're going to be heading down, and probably very, very quickly, because if you can take a market down from the 17th of August to the 24th of August, take it down 300 S&P points, you could easily repeat that swing again, and that would take you down to just about 1600 in the S&P. Well, it's between 1650 and 1700. Ideally, taking out that low that we made last Friday. We take that low out, there will be a lot of selling, because people think that is a major bottom, and they could be right. So remember that you've got to use some stops in these. You got to expand your stops if you're trading stock indices, because they're so crazy. I mean, the average hourly trading range in that thing is 10 or 15 points now. So it's pretty crazy. So live every day in an attitude of gratitude, and try to help someone who has a lot less than you today. And may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.